Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how I would trade Tempus AI. Now, Tempus AI is in the healthcare sector, so this stock is going to be extremely volatile and it will be a very tricky one in order for you to trade. Now, even if that's so, there's still money to be made. Opportunity is there. Now, if you guys are new to options, and you guys are trying to use options in order to make some additional income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I would show you how I would trade Tempus AI. Now, I have traded this stock before, and I'm going to show you the results at the end of the video. Now, Tempus AI, or the ticker, is going to be TEM. Now, like I said, this stock is in the AI sector, so it's going to be a bit more volatile than other stocks. So you guys know how we do it on this channel. Let's go ahead and get down and dirty with options. Now, in order for us to decide which option strategy we're going to use in order to trade Tempus AI, we're going to go into the Robinhood Advanced option right here in order to open up the chart. Now, we're going to go ahead, we're going to go to the 1 year mark. The 1 year mark is going to give us a good outlook, a graphical outlook, if you will, about what's going on with this stock. Now, as you can see here, there's lots of ups and downs with this stock, but that is not where you want to focus. What you want to focus on, you want to draw a simple long line straight across. And what you're looking for is to see wherever this line gets touched. Now, at this mark, which is pretty much around the $65 mark, if you go all the way to the end, it averages out around $65. That price has touched this line several times. Now that's extremely interesting, and I will let you know why in just a second. Now the 200-day moving average is down here, which is representative of this blue line. Now the 200-day moving average is the price that the stock has been trading at for the last 200 days or 6 months, and that is around the $52 mark. Now the 200-day average price is $52. However, the stock is currently trading at around $68. And the stock has touched the $65 price several times. So I'm going to tell you how we're going to use that information. Now let's go ahead and check out the RSI on this bad boy. So the RSI sits almost on the 50 mark. That is pretty good. Just as a reference, when we're paying attention to the RSI, we try to look at between the 70 mark and also the 30 mark. With anything going towards the 70 mark tells you that that stock is heading into overbought territory, and vice versa. Any share price that's going towards the 30 mark down here is heading into oversold territory. So Tempus AI is smack in the middle. So let me go ahead. I'm going to show you now what option strategy I would use with this. So let's go ahead to Tempus here. And now we're going to go and we're going to open up the Tempus options by going to trade TEM options. And that's going to open up our option chain. Now, for those of you new to options and those of you new to the channel, this area down here, the entirety of all this information is known as the option chain. What the option chain does is that it gives us enough information in order for us to make an informed decision. Now, before I go ahead and show you the option strategy I would use for Tempus AI, I just want to let you guys know, if you guys need any help with option, or if you guys have any questions about these different option strategies that I use on a daily basis in order to consistently keep generating income to grow my portfolio, then I will leave a link in the description. If you guys are interested in one-on-one coaching, that link will be there for you to use. Now, the fact that Tempus AI has touched the $65 mark so many times, this is the first option strategy I would use. And then I'm going to show you an additional option strategy to the end of the video, just as a bonus for this video. So I would go to buy, I would go to call. Now I'll choose my expiration date. The expiration date I would use, I'll probably go all the way out to January 16, 2026, which gives me 220 days to expiration. The reason I'm going to look for 220 days to expiration because, as you guys know, and I constantly keep repeating this in my videos, the most important aspect of trading options is always going to be the time value. So always make sure you give yourself enough time in order for the trades to work in your favor. Now that I have buy and I have call and I have a forward expiration date, I'm now going to go ahead and choose my strike price. The strike price I'll be going for is going to be below the current share price of 68.70. Now, the strike price I would go for is going to be right at the money, and that's going to be the $65 price right here. Now, at the money simply means the closest strike prices close to the share price. So the $70 above the share price is going to be at the money. Likewise, the $65 below the share price is going to be at the money. Both of them are the closest to the share price. So I would go with the $65 strike price. Now, with the $65 strike price, just pay very keen attention to this here, 85.40. This 85.40 represents your break even. I'm going to explain the break even to you as the video goes along. Now, because this is a buy option strategy, we're going to have to pay. The amount we're going to have to pay is going to be $20.70, but that's in option terms. In the real world, this is going to work out to be $2,070. And that's simply because each option contract contains 100 shares. So if you were to multiply 2070 by 100, you're going to get $2,070. Let's go ahead. We're going to click into it. And this is the strategy I would use with Tempus AI. This is the long call option strategy. Now, why would I use the long call option strategy? Here is why. Because I drew a line at the $65 mark, that helped me choose my strike price. Now, the fact that the share price hit the $65 mark several times along that line, that tells me that it looks like this stock is ready to break out in an upward direction. Now, always remember two things, and these two things I always require from my viewers and also my subscribers. Always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second thing is always make sure to have an exit strategy before entering any options trade. That way, if the trade decides to move against you, then you know how to get out of the trade. So, based on those things, that is why I chose the $65 strike price and I decided to choose the long call. Now, how am I going to use this option strategy to work in my favor? Here's why. All I have to do once I purchase a long call is to do absolutely nothing. I'm going to have this option contract sit in my portfolio, and while it's in my portfolio, all I'm going to be waiting on is for this share price to accumulate or to go higher. Now, with every dollar this share price goes up, let's say it moves from 68.70 and tomorrow at market open it goes to 69.70, then your overall option contract is going to go up by 0.68 or your delta. So it's now going to be 68.70 plus 0.68. Now, over the course of your 220 days that you're waiting, more than likely the share price is going to keep appreciating in value, and that is where you're going to make the majority of your returns. That return you're going to be making is what's going to be known as capital appreciation, or how we like to say on this channel, that's going to be your investment gains. So if I were to trade Tempus AI right now, the option strategy I would be utilizing is going to be the long call option strategy. The strike price I'll be choosing is going to be the $65 strike price because we have seen that the share price has touched that price several times. Now, for those of you that stay right now, you guys are the real investors and future investors. So I'm going to give you guys a bonus option strategy that can be used if you're going to use the long call. Now, before we head into that, remember, the only option strategy I would use here is a long call option strategy. I would leave it in my portfolio and wait until the share price appreciates. I'm going to do absolutely nothing. Now, for those of you that do not like this option strategy and you guys like to be active, I'm now going to go ahead and show you an option strategy if you want to make additional money while you're waiting for the share price to appreciate. So now that you have that long call in your portfolio, you're going to go ahead and use that long call as collateral to do this second option strategy. So now we're going to go over to sell. We're going to go to call, and now we're going to change our expiration date. Now remember, this is assuming that you have one contract of Tempus AI in your portfolio. We're going to choose the strike date of June 20th, which gives us 10 days to expiration. So buy, call, June 20th, 10 days to expiration. Now we're going to go ahead, we're going to choose our strike price. The strike price I will be going with is going to be the $90 strike price. Now, why am I going with the $90 strike price? First of all, feel free to go with the $85 strike price. The reason why the $85 strike price is perfect is because I showed you with the long call. By purchasing a strike price of 65, you have what's known as a break even at the $85 mark. So if you were to go and sell this call at an $85 price right here, then you would be selling right at your break even. So it's almost impossible for you to lose on this trade. In addition to that, you're going to have a 91% chance of profit, or a 91% chance that this trade is going to go in your favor. In addition to that, you're going to be receiving money. The amount of money you're going to be receiving is going to be 0.50 or $50. Now, that $50, you're going to divide your $50 by the amount of money you paid for your long call, which is $2,070. So that's going to give you a return on your investment of 2.4%. Now, for those of you new to options, 2.4% in just 10 days is an amazing, amazing return. That is extremely, extremely high. So not only are you making an amazing return that's extremely high, you're doing that while still being very safe. Now, I did mention I would be going with the $90 strike price, and the reason for that is quite simple. I like to be a bit safer. I'm a lot more conservative. So by going with the $90 strike price, I would be able to give myself a lot more wiggle room. Now, in addition to that, now I'm going to be choosing a strike price above my break even, about $5 above my break even. So I will still be profiting even more if the trade were to go against me. Now, in addition to that, by choosing a $90 strike price, which is above the $85 price, now I have also increased my chance of profitability, or rather, my chance of this trade going in my favor. However, this is the only downside. The downside is that now I'm only going to receive 0.25 or $25, as opposed to before I receive 50 right here. Now, the 0.25 is not that bad. Once again, you're going to take your 0.25, you're going to divide that by the amount of money you paid for your long call, which is $2,070, and that's going to give you a return of around 1%. Once again, 1% in 10 days is an extremely lucrative return. When you're doing options, always make sure to check your percentage return as opposed to the amount of money. I know $25 may not sound like a lot, but a 1% return every 10 days, that's incredible. That's a very, very high return. So there you have it, investors and future investors. Tempus AI is a very volatile stock, so make sure you do your own due diligence before investing. If I were to trade Tempus AI today, right now, the option strategy I would be using is to purchase a long call. Once I have the long call in my portfolio, I would go ahead and do absolutely nothing. If I do want to make some additional income, then I would go ahead and probably do a covered call at a very high strike price, a strike price above my break even with a high chance of profitability, just to make the extra money. The whole point of you getting the long call is to wait until the share price appreciates. So please do not make the mistake and try to make more money here while compromising the actual thing that you got into, which is the long call. Now, I did tell you guys that I have traded Tempus AI, so I'm going to show you a trade I did and how it worked out. Now let's go ahead. We're going to go down and I'm going to jump into my history. And I think we have one right here. Okay, so this is one trade I closed off today. And the amount I received was $645 credit I received, but the amount of gain I got was $120. So I did do an option strategy on Tempus AI, which was the one I just demonstrated to you, which was a long call. I was up on the trade at $120. I went ahead and I closed the trade. There you have it, investors and future investors. Happy trading. Now, for those of you that made it to this part of the video, now is a good time for you to go ahead and like the video. Subscribe to the channel. Please make sure you hit the notification bell to get an alert when I post a video. I do post pretty often, but most importantly, if there's anyone out there you know struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. We're trying to help as many as we can make extra income in order for them to get away from that 9-to-5 job. Now, until the next video, keep pushing your investments.